Great. Okay, so we're recording on a different machine today. So if Tom's PC crashes, we'll still have the recording. That's the theory. So you may have noticed, if you've been on the VSA Club website, the recordings that we do have are now on there. So they disappeared for some reason, but they're now back. So I'll now hand you straight over to Mr. Williams. Are you ready, Tom?
Yeah, thank you, Peter. Thank you, Rita. Tom Williams here. Thank you for tuning in. And we're here in Worthing, in my office here, and we're looking forward to talking to you. Now, for the stock market. Now, I assume you can all see my chart up there. This is a 4-hour chart. Now, there's no special reason why I've got a 4-hour up. You can put any time frame up you like and pick the one that you like, the look of, one that's working for you, or one where you can recognize that you can see the principles. All we're looking for is VSA principles, principles of supply and demand. Now, I'm not sure exactly the type of audience that is listening. Rita's looking at the screen here, at her screen, which is a separate computer, and therefore she can read out any questions that you might have. But I'm not sure if we've got any real beginners that know what on earth we're talking about or not. Is there some way to find out, Peter? Yeah, go on.
Yeah, so Tom's asking if you're new to VSA in particular, please type in something to the questions box, perhaps N for new, so we get an idea, or Tom gets an idea of his audience. Obviously there's a number of people there that I recognise the names of, so some of you definitely are new. Tom?
Rita says we have a few. Well, okay, for all the N's, or the news, and you could never repeat this stuff enough anyway. Even if you've been using VSA for years, you've still, it still doesn't do any harm to listen to the old record being repeated here. What we're looking at here is, as you know, the future of the S&P 500 cash market. And what we're looking at, VSA, we call VSA principles, right? That you can more or less say, yes, it's going up, or yes, it's going down. Remember, though, that you're up against professional money. Now, when we talk about professional money, we're not talking about a group of people there that are there to help you. We're talking about a group of people there to make money for themselves. And that, if they want to make money, then you're right at the bottom of the list, right, as far as help's concerned. But they can't hide the chart. Their actions are on the chart here. Now, when you look at the chart, it's almost like reading. It's a language, a new language to you. And like anything new, it takes a little bit of time to get your head around it. It's not complicated. It's all based on common sense and logic, nothing else. We don't use any clever formulas. We don't have to lie to you. We don't have to tell you this or that. We tell you not to listen to the news and all the rest of it. Talking about the news, I mean, I was sitting here with Dallas, my partner. We had the news on last night and early this morning. We were looking at it. And I hate to say crap, but it was a load of rubbish. I'm sorry. And it's on television, BBC. You know, they're all there so serious, and they're looking at and telling you this and that. And one commentator even said it was Ebola in West Africa that's causing the fall. I mean, what a load of rubbish. I mean, surely, but it sounds so convincing 'cause it's on television, so they must be right. But that's just, it happens all the time, all the time. They don't know anything about the market, these commentators. They're reading scripts. People who write scripts still don't know what they're talking about. How 3 or 4 of the poorest countries in the world in West Africa can affect and cause the American market to fall is beyond my comprehension, to be quite honest. But there you are. That's what they were saying. But if you're not aware of all this, people fall for it. You know, so don't listen to the news. Listen to the news, but laugh at it, because they're never right. I've never heard them right. I mean, on the low yesterday, right, they were on about Ebola and this and that and all the rest of it. But they don't tell you the truth, because they don't know the truth. What they should have said is we'll move the cursor over to this is a 4-hour chart, this low here, look here. Right? Now we can see we've got a red down bar here. Now this is where they're telling you the Ebola and all that nonsense. What they should have said to you is say, oh yes, we've got lots of bad news, but the market doesn't work on that. Here we can see clearly that we have a serious down bar, right, which would result is the way the market makes the market down. However, if you look at the volume, right, forget about Ebola, look at that terrific surge in high volume. Oh, and on that volume, which is activity, on that activity, it'll close in the middle. So that's professional money stepped in. Not only that, we've got a signal. Yeah, it's called a potential selling climax. Now, it doesn't matter which way you cut the cake. A selling climax means that the market has shaken the small traders out of the market, catching stops, not all of them, of course, but a lot of them, all those that are looking at this, shaking them out, and it creates a vacuum of a certain amount according to market conditions. So the professional money says, oh, this is great. We can move in and buy our 50,000 contracts, and we're going to make a bit of money here, right? But they'll never tell you that. Oh, no. The market's so weak because of Ebola, right? And you're supposed to believe all that. Now, we have a principle which we know, right? We call this, there's even a signal on that one too, look. Both, right. So we have 2 automatic signals. They come automatically. It's got nothing to do with human beings. It's just cold logic written into the code, right? The computer doesn't read the news. It couldn't care less about the news. It doesn't know what the news is. It just does what you told the programmers to do. And that is, after a fall, right, if you see a fall, right, and you see widespreads down, closing in the middle or high even, and that volume, which is activity, volume is activity going on. So it must have been buying. Excuse me. Must have been buying there, because on that huge amount of activity, look, there it is, it's closed in the middle. So it must have been buying. It's fairly straightforward and logical, isn't it? There's nothing clever about that. Right, but we do know that they will want to test these markets because they've got such huge amounts of money involved. They get nervous, which you would too if you were doing that. So we know that they like to test at some time. So right, so if you believe that, which the computer's telling you it's buying, look, if you believe that, then you'd expect a test. So it goes up, look, right, it's not a lot of demand there. It's gone up, look, on low volume. That means that although it's been marked up by the market makers, which can do that quite freely and easily. They can mark these things up, right? However, if you look at this blue bar, it means it's up. But look at that low volume, right? Forget about the numbers, the figures, and the average line, all the rest of it. It's low because it's low less than the previous two bars. And we always look at what we call relative volume. Relative means relative to the previous volumes. So here they put, if you're a boxer, you punch very, very hard, but then the next punch is weak, even though it may even look fairly good. But it's gone up. Now we know there's no demand there, look, because it's been marked up, and you've got this strength right behind you. Here, that's unmistakable. You can't miss that, right? So it goes up, closes in the middle, and there's, lo and behold, oh, we've got the computer sees now. What's that say, Pete? Ooh, there you are. The computer's noticed it as well now. It's gone up again on the blue bar, but look at that narrow spread. There is absolutely no interest on the upside at the moment, despite that terrific strength in the background, because they like to test. They have to be very, very careful, right? Because there are no friends in the stock market. If they make a mistake, other professionals will move in and grab what they lose, believe me. But so they've got to be very, very careful. Okay, now this is a 4-hour chart, so it takes quite a bit of time to do that. And even the next bar's got the same look. But look at that narrow spread. There's absolutely no interest at all. And knowing that they like to test the market, this is the key to it. Knowing they want to test, this is the principle. You can't just go from here like a rocket up to heaven. It's got to sort of warm up, fire up, right? Warm the engine up, then test. And you'll find that that's all these markets do the same thing. Like we're watching the currencies, the pound, the dollar, the yen, whatever it is, they all work the same way. They have to work the same way because it's run by supply and demand, created by professionals and the rest of the traders. So we know clearly here there's no demand. Look, now I'm not quite sure what time that was. What time was that, Peter? Oh, that was. Okay. So anyway, the market opens today, right? Is it? No. Well, you can't say that clearly because it's a 4-hour chart. It's a 4-hour chart. But anyway, whenever there's suddenly there was this huge widespread down. Now, that could be very alarming. When you look at the chart, you see this huge widespread down closing near the low, right? If you're untrained, if you know the markets don't work on supply and demand, the news pours out, everything's coming to an end in the world, everything's going to pack up, right? Everybody's going to die, no problem, right? So they mark it down, close near the low, but you, as a professional trader, remember this. This must have been professional buying. What else could it be? It can't be selling, can it? High activity on the red down bar, closing in the middle. Even a 5-year-old kid could probably tell you that. But here now, look at the volume here. As they mark it down, look, the volume's very, very low. That is a buy signal. That is a VSA principle that you see all the time. I know it's easy in hindsight to see this stuff like this, but it was there, and if you understand the principles, you won't miss that. All right. Okay, now to confirm that, the very next bar, look, is up. So what we have here, The computer's made a mistake here. We've got a red arrow, but that's normally, I suppose, would be a sign of weakness in the computer's eyes. But we can see far more, far further ahead of the computer. Right. So on that, it's reverse look. So we now have, really, what this is a shakeout. You call it a shakeout. You could call it a two-bar bottom reversal. Right. There's all sorts of things you call that. But the main thing is, because you know that there exists, it has moved. It's not going to move. And now it's plunged back down to that level. It's the level that's important. Right. Forget about numbers and all this stuff. Forget about, oh, will it this, will it that. Forget about that. It's back down into that area, that level. And now at that level, the supply has disappeared. There is no supply. That is to speak, no serious supply from professional money. So that is telling you, loud and clear, I'm going up. Because the markets move on supply and demand. If there's no supply, it's going to go up. Professional money know that, and that's why this blue bar is up. Here, it's up, widespread up. Even that's not by accident. That widespread up is done deliberately, and it's what we call a gotcha bar on the upside. It's there so that if you were, say you were advanced enough to recognize that, right, as a sign of strength, but because you're a human being, you might hesitate, thinking, oh, well, yeah, the news is so bad here, Ebola and all that stuff. I think I'll wait and just see what happens. The professional money know how you, or people that we call it the herd, or the mass of people on the other side of the trade, or non-professionals, think. So they mark it up heavily. And then you think, you look at it, oh, wow, oh, I've missed that now. You've missed it, according to your interpretation of it. I should have gone in a low. I should have believed what I saw, but I waited. Now it's too late to get in. I missed that. So I'll just go and have a coffee and forget about it. But that's what they want. They don't want you in on these bargain prices. But they still want to test these markets. Right? So it goes sideways, look. That bar there is what we call a weakish bar. Although it's not too bad, but it's gone up. Right, it's closed in the middle. We got two red arrows here, look. Yeah, no demand again, look, our friends. Two again, look. So lo and behold, that's all. I think it's the last, what, 3 or 4 months that we've seen this every time, is that when you see these no demand arrows, right, they test. And if they test, that's guaranteed they're going to make higher prices. And lo and behold, there's a test. There's no signal on this time frame, but it's a test. A test, right, is a down bar on a narrow spread, closing in the middle, and the volume is low. They've tested the market. There is absolutely no supply in the market. Now, markets, you've got to believe, work on supply and demand. There's no clever formula. There's no clever secrets. Right? If you hear people telling you that they have a secret nobody else knows about, you can rest assured you're being groomed for a con of some sort. Right? But we know that that's a strong signal to go along on. Why? Because you've got this in the background, look. That, you've got the shakeout, right? And now you've got no demand here, and they test it. We've seen this time after time. Week after week, we say this in this market. So a test is they're testing for supply. A down bar, narrow spread, close in the middle, volume low. And I've got these bars, down bar is red, blue bar is up. Immediately professional money can see that. Widespread up. Again, it's the same principle as here, look. It's a gotcha bar on here, not quite so dramatic as this, but still a gotcha bar. If you sort of miss that, you say to yourself, yes, I saw that test, I was just a bit nervous, I was just waiting. They know that, so they mark it up heavily on a widespread up. So you say to yourself, oh, hell, I missed that. I'm going to wait now. And that's what they don't want you in on these bargain prices. And therefore it's still going up. Now even over here, look, I noticed. Well, you can't help but notice. Here is our favorite, one of our favorite signs of weakness. Well, there's two, look. This would be no demand. What's that, Pete? Supply coming in, right? Professional money would see that immediately, right? So the market makers would immediately see that. So what they do, they mark it up, look, what's that, Pete? Up thrust, there you are. Reese's favorite signal, and up thrust, look. Right, now why is that a sign of weakness? Well, you've got this red arrow on the previous bar, but forget about the red arrow. Try to look at the principle. High volume, look, on a narrow spread, closing well off the high. After you've seen that move. Right, they spot that immediately. So they ram it up, catch as many stops as possible, which is very profitable. Remember, above and below these markets, there are not hundreds, but thousands of stops. And believe me, it's very, very profitable to catch as many as you can. Not only that, it misleads many, many traders. Right? Saying, oh, it's going up, I'm going long, I'm jumping in, I'm going. Or, if they were short, they say, oh, I better close that short out. I don't like the look at this. And that's what they're after. They do it deliberately. Right? And you know then any blue bar after that. Right? What's that? No demand, Peter?
Well, it's low volume.
Well, this one is. Now, they're very, very clear, look. No demand up bar. And then they pull the plug. Ram, down it goes, back to where we were here. Now, that's a 4-hour chart. Now, I'm showing you a 4-hour chart, not because it's anything special. All the charts are very good, right? But how to interpret, it's a language. Remember, it's like reading a book. You're reading a story. Now, it's obviously bullish at the moment, and it's going to stay bullish until the signs of weakness come in. As simple as that, until the villain shows up. That's what the book's all about. It's Braille. It's a book that you're looking at. Forget about all the news and all the rest of it. I mean, I worked for a trading syndicate for 15 years in Beverly Hills, California. And the tricks that they got up to would be quite surprising. They had a big office in Century Towers. On the door, there was no signs, nothing. And but believe me, they made a lot of money. And they used to buy and sell the underlying stock, accumulate, distribute it. But there's so many different ways to trade these markets. It's no good, even if I wanted to, which I don't, say, right, you buy now, you sell now, take the money to the bank. Right? That is very, very bad. It'd be a nightmare for us. Imagine telling thousands of people what to do. Be a nightmare, because there are so many different ways to trade these markets. Perhaps you might want to trade options. We have lots of guys and ladies here that trade options in VSA, and the ones that seem to make consistent money are those that are only in for 3 or 4 days. They're not in there all that long. Those options are written by experts, not written for your benefit. Remember that. The market has a professional activity going on, and that professional activity is seen by looking at the volume or activity, which is another word, not the numbers. What is the activity going on? Is the bar up or down? And because the nature of trading is that if you want to buy 50,000 contracts, you have to buy as the market's falling. You can't buy as the market goes up. There are no friends in the stock market. Other professionals will see you try to buy, and they will mark it up against you. There are no friends in the stock market, believe me. But, however, the opposite is also true. If you now want to unload and sell your holdings, then you have to sell it, as the market's going up. And we have signals where you can see that going on. You can see them buying at the bottom, selling at the top. Now, are there any questions about this chart before we look at something else? Rita said yes.
Winston asks, is that widespread red down bar a strong or weak bar?
Well, I've just told you what it is. I'm sorry. Well, it does look weak on the surface. It looks weak if you're a TV presenter and it's all you can see. It must be weak because it's fallen so heavily. That's all. That's about as far as their vision can see. But we don't look at it that way. We look at it, yes, it's down. It looks weak, but look at that low volume. Knowing that there's no professional activity in there compared to this look. It's compared, you're comparing that activity of volume with this here. Markets move on supply and demand. If there's no supply, that's going to go up. You'll see that clearly. And if you can take that into your brain and keep it there, and not listen to all this other rubbish.
Edmund says, I have a question regarding the archive videos in the VSA Club. I sent an email to AJ, but he said he couldn't do anything about it. I think you might find that Tom's, what ones have you put up, Peter? Click on there now, you see what's there. Have a look, see what Tom's recordings are there. Peter put some up, quite a few up that we found. Do you think that we've got any more, Peter? No. So we've got to put up everything of Tom's that we've got. So I don't know about other people. Carlisle is saying, do you believe the S&P will continue to go up until signs of weakness appear?
Well, the short answer to that is definitely yes. And don't forget, it's traditional. We usually get a Christmas rally. Now, I shouldn't say that because that might put you off. We may get some serious weakness in a few days' time, and you said, oh, well, Tom Williams said it's going to go up. I didn't say that. I said traditionally we have a rally. But you've got to be flexible. It's the unfolding story. Tell them about what you put up on your archive, or whatever it is.
Oh yeah, so as far as those archives on the VSA Club are concerned, I put all those up in recent months that we have. There were a few missing in September because the recordings crashed each time. So whatever's there is what we have. So if you go onto the VSAclub.com and see what's there under the archives for Tom, that's what we have. Rita.
question here. I'm not sure what this refers to, but is the correction over, or will we have a new low soon?
Well, there you are. You see, you're reading things into the market that isn't there. I mean, you've moved away from the VSA book. You're reading some other book now, right? This is a correction here, and we can see that it's fallen here. We can see that the professional money moved back in the market. What was the question, Rita, again? Well, no, this is a big correction here. Now, you've got to be flexible. It's no good reading things into the market like that. Is it going to do this? Is this? Is that? What you've got to do, you've got to read what's happened and believe it. Market moves on supply and demand. Right now, it's bullish. That's all you need to know. And if you're scalping, which we do in the office here, right, that's bullish at the moment, look. As soon as you see these testing, the shakeouts here, this is bullish. So keep reading the S&P, or the Dow. Is this the Dow? Oh yeah, sorry, yeah. Now, why I keep asking Peter is, I don't know people new to it, but I'm getting on a little bit now. And my eyesight is not anywhere as good as it used to be, obviously. But Peter here, he's only a youngster, really. Right, so, and Rita here, she's fantastic as well. And therefore, I get them to read out just to make sure I'm talking to you correctly as I know. But I know these markets so well that I can really interpret most of these markets without having to see all that well, to be quite honest. Of course, I'm the one who computerized all this many years, well, 10, 20 years ago I started. And see, this is what I say to people. I say, look, if you think the automatic signals, these are automatic signals that come in automatically on your data without the intervention of any human being at all, if you think that some of these signals are, should we say, pretty good, then what that means is that what we're telling you must be the truth, must be how it all works. What else would it be? Computer doesn't stand any fools. A computer won't stand any mistakes in your logic. It won't study it won't respond to silly things. It just doesn't know how to. You've got to put the facts in there as it truly is. We even tell people how these signals are created. We don't hold secrets back. There are no secrets in the stock market. Professionals read this market just like I'm telling you. Probably some of them not quite so good, but a lot of them do. Anything?
So could you just clarify do we know if the correction is over? And a question, do we have to look for weakness again, and this will be a signal that that there will be a new low?
Well, to be quite honest, what you just said doesn't make any sense at all. You're not looking at the logic of it. First of all, we're telling you that there's all these bullish indicators around. Now you're talking about will it make a new low? Right? The markets respond to supply and demand. And it's going up. We've seen them tested. Look, there's a test there, there's a shakeout, test there, shakeout, I mean there. And that's why it's going up. at the moment. But until a sign of weakness appears, where we can see professional money unloading their holdings that they accumulated on these lows here, then that market's going to keep wanting to go up. As simple as that. We haven't seen that yet. Now we look at another sort of chart. Is there any more questions there? Well, put 5 minute up first. That's the S&P. What's this? What of? Yes, no, just, okay, there's a 5 minute chart, look. I'm just trying to find where that 4 hour was. It must be here, look, somewhere. Five minutes, you see, now we're talking about here, now, this is a 5 minute chart, so we do have a bit of supply. Hit the 5 minute chart here, look. That'd be no demand. And that's why it's come off here a bit like this. It looks more dramatic because it's only a 5 minute chart. Go on then. Peter's going to switch to a half hour. What's the 30 minute?
So there was my time to go long for a period. I'd like to come out.
Right. You went long, did you? Well, there's some weakness there, look. So, there it goes. Now we've had a bit of an up move here. This is a 30 minute chart. But if you specialize in something, you see, you'll get so familiar. The first time I've looked at the half hour for some time here. But there is a sign of weakness there, look. And it was tested there. There's a gotcha bar. There's another test here, look. But up it goes, but that's a sign of weakness. But you will get a certain amount of correction appearing. But overall, it's bullish. Now, is there any questions before you go anywhere else?
Yes, Peter here. I must admit, I personally, I think we all sort of suffer from this. We get sidetracked by the news. We get sidetracked by what other people say. And thirdly, we get sidetracked by ourselves. However that works out, I don't know. But the chart tells the truth. So even when Tom says something like, well, it looks bullish to me, that may well be right, but it has to be taken in context. So the context is that overall it's bullish. It doesn't mean to go long this minute, because depending on your account size, the trade size, and everything else, you could find that it would be a big mistake, for example, to go long at this moment, because if you drill down to the half-hour chart, say, you can see that now is not the time to go long. Not yet, anyway. It might be soon, and it might not be. So do bear that in mind. I'm saying that because I've been caught out myself listening to other people and maybe misinterpreting what they said, or perhaps they didn't know what they're talking about. So the idea with VSA is you understand the principles, you learn this skill of understanding how the market works, and based on that you do your trading. Indicators that come up on software like this are very useful because they help to explain what's going on. So you might click on an indicator, which you can on this software, and a dialog box will come up and tell you what's going on. So you should read all that information there to explain why that indicator may have come up. So that's what I did when I first started. I looked at this as a learning program rather than a signal to go long or go short. And of course I found that my knowledge and experience is the best guide in the end, once you learn the principles of VSA. So, you know, full immersion by, you know, coming on these seminars, reading Tom's book, going on seminars about VSA, you will pick it up in the end. I have. If I can pick it up, then we all can. But it's not a 5-minute thing, and it's not a thing of where do I go long, where do I go short. If you're asking that question, you're not ready. It just means that you have to look into the whole thing of how the markets work, which is volume spread analysis, explains it and shows it. And when you've learnt what's going on, you'll see it. And you might not believe you'll see it now, but you will see it. That was my experience.
Yes, so Edmund said that the 60-minute chart broke the downtrend, but the daily is still in the downtrend. He's speaking based on the SPY chart, the SPY. Philip Friston is here. Hello, Philip. He says, yesterday we saw huge volumes on down bars in many of the world indices. Many of the indices showed shakeouts, clearly buying coming in, although the supply needs testing. And talking of shakeouts, Tom, Winston would like to know, is a shakeout bar considered weak or strong?
It's a strong indication, the shakeout. That's why it's there. I mean, imagine you want to buy something, right? Say you want to buy a car, second-hand car somewhere, but such a good buy that there's several other people would like it as well. So what do? You say, right, okay, you get some nice, try to get some bad news out about the car. The edge is noisy, or the brakes don't work all that well, right? Or it's been remade up after an accident. Anything, you don't care, as long as the so-called bad news gets out to all these other people here. And on that, right, they mark the price down, right, and then it's reversed. That is a successful shakeout. I don't know whether that makes any sense or not. But don't forget, you're dealing with human beings. Human beings, when money's concerned, is a devious lot, and you can't trust them, especially professional players like this. They're there for themselves, not for you, not for the government, not for anybody else, right? You know, when you hear all this news about these things, conspiracy and this and that, and going on, it happens all the time. It's just that most of the time they don't get found out. So they take a chance. So a shakeout is a sign of strength. Don't forget, a shakeout is when it's marked down. The volume is probably, well, it would be very low compared to any other volume recently, but it recovers quickly, closing them out. That's a shakeout. We could call it a two-bar bottom reversal. And that, the reason why it makes the market strong, it shakes the market out, catches stops, it creates a vacuum underneath. Professional money can then step in and buy, and they know that other professionals are not selling at that moment. The big danger to you, if you're a professional and you've got 50,000 contracts or more in the market, that something's going to happen where you're going to lose lumps of that. And the only thing to do that, you know that, is supply would hit the market. That makes sense?
So Kip says that's what has happened the last 2 days. Is that right? going to look at the daily chart now.
Well, that is happened the last 2 days. Well, last day there, look.
Yeah. Don't forget the volume is not lined up, Tom. There's an E signal, so the volume's on the wrong bar.
Is it?
Yeah, so that blue volume should be on the previous day, which was right. So really, if you look at the end of the day, you might get a better picture of the last 2 days.
This is the end of the day chart.
Yeah, but it's the future, which we don't have the volume is mismatched.
Well, the future surely isn't, is it?
Yeah, it's E signal that we get. They don't put the volume on the right day.
Well, they say that E signal doesn't put the volume on the right day. Now, that could possibly be true, because when they themselves have to buy this data off the exchanges, professional money who run these exchanges know perfectly well the value of volume, right? So what they do, they say to people like eSignal and that, well, you can have the volume, you've got to pay more money for it, right? If you want it live on the day, you've got to pay more for it. But if you wait a day, delayed day, you can have it cheaper. So because very few people understand what the hell volume is all about anyway, they take the cheaper option. And that's why it appears on the next bar, which you see in wheat and corn as well. Right? So they say, Peter's just told me, which I'm not quite sure is absolutely accurate, but that volume should be on here, which makes sense actually. There's your shakeout. There's your climactic action here. Now, don't get too worried about this volume manipulation, because VSA, should we say, gets away with murder, gets away with it because it relies on what we call relative volume. Now, what's interesting is, a week or so ago, we drew these trend lines, look. And I believe, didn't you draw an arrowhead, Peter? Oh, was it? Right. A whole week ago, right. Okay, so that is the shakeout there, look. Don't forget, it's below the trend line. That makes it oversold. Right? Below the line. Above the line, it's overbought. So here you're vulnerable to professional money thinking, right, it's fallen now, it's going to go up, or we can make it go up easier. Right. Now don't forget, the market, when it hits this trend line here, although it's a lower trend line, it may, if it's bullish, has to push through that. But you would expect that market to push down up through that trend line. But you have to read it as an ongoing story. That's part of the reason why people lose money. Because, well, apart from the fact is that you hear nothing but lies about why the market went up, why it went down. Well, they're not lies, they're just a load of rubbish, to be quite honest. I mean, when I was worked in a syndicate, if we were wanting news to come out on a particular stock that we were interested in, we had newspaper reports on our books that we could ring up and read out a story to them, and they would print it. We wrote it. We told them what it is. Of course, it was a story always to back up what we were interested in. I mean, I've told a story several times before that we used to trade Teledyne, which was a stock where the headquarters was in Beverly Hills, where we were. And if we were trading that, which we did quite a lot, right, and they had their annual general meeting, right, where they hire these huge halls with several hundred interested investors in there, we could easily send along 2 or 3 plants in that audience to stand up and ask questions. And of course the questions were all in favor of what we wanted the stock to do. If, for example, if we wanted to sell, then we might stand up and say to the directors who are all sitting on the stage, we hear that you have a new contract with Saudi Arabia in the making. When will this be signed? Ask them like that. Now, it's a load of rubbish. We just made that up. Because when the directors, don't forget, the directors of a company usually have very, very little to do with whether their stock goes up or down. If you ask a director, you say, look, why has your stock fallen so much? They usually shrug their shoulders and say, well, we don't know. It's the company's exactly the same as it was a year ago. They personally have nothing to do with it, right? But, of course, if you can get them to depart with some of their shares, if you can get them to make statements which you want in your favor of which way you want that to go, all well and good. Of course, when that question was asked, then the directors look up, look at each other, because they don't know what on earth you're talking about, so they say no. But the audience have listened, and they say, ah, yeah, they're trying to keep that secret look. Now, if you don't believe that this can happen, we obviously have a very, very good example of that very thing happening in British Petroleum. We all heard about when they had this well in the Gulf of Mexico that they couldn't stop flowing. In fact, it was so bad it was going to flow forever, right? And the news was horrific. It was bad. It was really horrific. It was so bad, Colonel Gaddafi was going to take over the company, and so on and so on. And one day I was watching this, looking at this stock, and suddenly a green arrow appeared. And I thought, oh, computer thinks it's time to buy. And yet the news, that's where they were on that day, Colonel Daffy was going to take over. It's in such trouble, right? But lo and behold, the reason why the computer came up with a green signal was it was a sudden down bar, and the bar was narrow, spread. That's from the top to bottom. The volume was very high. It was down into fresh low ground. Now the only thing that can cause that is professional money has moved in to that stock and buying. So even though I looked at it, I thought, Christ, I was a bit taken back, right? But lo and behold, from that point on, it went up. And we found out the reason, well, I guess what the reason was, quite quickly actually, was they'd actually capped the well. And they were keeping this secret. The company did not announce that the well was successfully capped. They were still letting all the negative, bad news come out, because they wanted to move in, buy a lot of that stock, and it went up. Now that's the fact. You can see that on the chart, live happening, if you can look back. Gabby was looking at the same thing at the time. Any questions around?
You were talking about volume with eSignal, and Philip is saying the futures exchange release estimated volume on the day. Sorry, I'll start again. The futures exchange release estimated volume on the day and correct the next day, usually very minor differences. Other data providers do provide the volume correctly. Thank you, Philip. Let's clarify that for everyone. Robert said quite a while ago, sorry Robert's been waiting, one big investor on Apple who has 53 million stocks said that the price of Apple should rise twice the current price. Do you think it's manipulation?
You don't look at it that way. I'm sorry. Can we look at Apple? We only have end. Well, that's all right. That's the end of the day. It's better, I think. So Peter's going to put Apple up for us. Of course, we know Apple. Hang on. Yeah, that's right. I only have end of day. Right, but it looks as if they have been distributing here. There was this, whenever you see this very steady, orderly, you know these blue bars here, look, and there's a test, look. That's what I call my simple trending system. Once professional money have got their teeth into a move, right, and they're sitting there, they bought, and they're quite happy. What they do, they must maintain the trend up, and they make sure that the close is higher than the close of the previous bar. They always do this, no matter what sort of stock it is, in a bullish market. And that's why these bars are blue like this. It's showing that principle at work here, look. Until a sudden weakness comes in, look. And this is probably here. Something there, what's that? Oh, there. Well, fair enough. No demand, but there's no big supply going on that I can see. But something happened here, look. The market then, once they're not involved in this move like this, then it starts oscillating up and down like this. It looks as if they've been distributing or selling quite a bit here. But right now, I would not be interested in buying Apple for the simple reason is that the principle of VSA, as far as stocks are concerned, it's because there are so many thousands of them, right, we can pick. And you'll find that what these main companies trade in these stocks and shares stocks is they send out experts to the companies, and they do what we call fundamental analysis. That's it. Fundamental analysis. Now they send those reports back to the big trading houses. Now, big trading houses then know the fundamentals of that company at that moment. And so it stands to reason that when the S&P 500 falls, if you see a stock that's reluctant to fall, or even refusing to fall, that the trading houses must have had good fundamental reports about that company. I think Peter's just updating. He seems to be all right. And that's what we're after. That's why we say you need stocks acting stronger or as strong as the index. So I would say right now, although Apple looks weak there, at the top there, it's going to move up. It's not moving up with the general index at the moment. But I was surprised if we don't get some sort of rally here.
So John would like you to look at crude oil, Tom. Crude oil is there, up to date to yesterday.
Right. Gavin specialises in crude oil. It's a commodity, obviously. He's had a lot of publicity here. Of course, when it falls through these trend lines, it's now oversold. And here's the down bar here, look. It's red, so we know it's down. Note how narrow the spread is. And note it's closed up high. And we have some sort of yellow box here or signal. And the computer's telling us that looks like a test after a shakeout, which is probably about right. And that's why it's gone up yesterday. You would expect crude oil it can't go into a bull market as such, because there's not enough cause. You have to have a cause. A cause is accumulation of professional money moving into that commodity. And that we see, you have to see stopping volume, you have to see testing, so on and so on. I would say that is still weak, but it looks like it might go up a few bars.
Okay, so I'm sorry, folks, if we haven't been able to answer your question. We've run out of time, so we will be back next. Yep, we'll be doing the newsletter this Sunday, and we'll be back with Tom live on Friday, next Friday, same time. Thanks for joining us, and we'll see you next week. Bye-bye.